As far as the S&P goes, we do a little lesson time here today, because when the markets are boring, I like to teach. I like to teach anyways, but let's take a look. You know, the S&P, whether you're using the futures or you want to use the index SPX or use an ETF like the SPY, we're referencing the S&P. It has 11 sectors, and the S&P is a market-weighted index or value-weighted index. So in other words, the larger the company is, not by stock price, but by pure valuation, the more weight it has on the index there. And so it's based on the values of the companies. The values of the companies can change over time. And it's a good way to see, looking at the individual sectors, it's a good way to see the impact of an individual sector on the market. There are some sectors that really can't do much at all as far as the market goes, even if they have a great move there. But I want to show something to you here. So let's go over here. We did a little breakdown. There we go. Here is the current percentage sector weighting by sector, right? So the obvious one over here is tech. Tech currently makes up 27.26% of the entire S&P. If tech has a good day, it's very likely that the S&P is going to have a good day as well. Now, at the bottom, we did something different. See the 76, 64, 66, etc.? That's the number of stocks in each sector. There are 76 stocks that make up the tech sector and account for 27%. So we can take the stock market, the S&P, and say that's broken up into 11 sectors. And of the 11 sectors, there are stocks inside of them, in this case, 76 of them there. So you'll notice that obviously there's a big name there. You've got healthcare, financials, and consumer discretionary. The next three there, looking along, they're the only other sectors currently that make up 10% or more, double digits, of the S&P 500. Now, this can change as the value of these stocks inside of the sector go up and down. So, for example, industrials, here it is, has 7% of the S&P's weighting, even though it has 71 stocks, the second largest amount of stocks in an individual sector. So those 71 stocks, a lot of them, right? It seems like a lot, can have a really good day, but if everything else is down on the day, it's not going to move the market there, right? So kind of interesting there. If you look at it, tech is about 3 times as large as industrials in percentage terms, but it has about the same number of stocks. So that's why you can see things like that. Why are industrials doing so well, but it turns out the stock market doesn't really care? It's because it only makes up 7% of the entire sector there. Notice that energy right here is 4.5%, 4.55%, has 21 stocks. And isn't energy the best performing sector of the year? Still, right? Even though this recent pullback has hurt it a little bit. Energy, if we look year to date, is still up 30%. At one point, it was over a 60% gain year to date. That was the only sector, by the way, that was positive for most of the year. But it can be up 60%, but because it only makes up 4.5% of the S&P, look how strong of a rally energy can have, and it had no impact on the market. Right? It did not do, the market moved lower, right? All year we've been going down, energy screaming higher, 60% higher, but because it's such a tiny piece of the S&P 500, it really has no impact there. The smallest 6 sectors, materials, real estate, utilities, energy, consumer staples, and industrials, are almost all combined the same weighting as tech. Shows how important tech is there, right? So we used to say, as tech and financials go, so goes the market. Well, that was back in my day, 2006, 2007, somewhere in there. That is not the case anymore. It used to be that financials made up 22% of the stock market, and tech made up 33%, give or take 0.1%. So you would have 50% of the entire stock market driven by 2 sectors. If those 2 sectors had a good day, it was very difficult to see the other 50% of the market. It would have to be down so much. All these other sectors pull the stock market lower there. Now, as the stock market moves, the weightings can change. So periodically we talk about these weightings. Since the beginning of the year, here's the change in weighting per sector. So energy's 60% rally throughout the year has caused it to earn an extra 1.81%. So we were down here under 3% total, but the rally this year added 1.81. Now we're sitting at 4.55. Healthcare, you can see, actually over the years, healthcare has added more and more and more. So since the beginning of the years, it's up 1.74% more weighting in the S&P 500 there. So really kind of an interesting look. You got tech also losing 2%, which nobody really noticed, right? Because it was at 29%. Now it's down to 27. Doesn't matter. Still a big piece of the puzzle there. But it's kind of a cool way to look at the overall market, right? How do these weightings change over time? And this is only year to date, by the way. If you were to look back 5 years, 10 years, etc., you'd notice financials had a bigger piece of the overall market. Their values have come down, and so now they're not as heavily weighted. They're in third place relative to the rest of the market there. So I don't know. This is a cool way to talk about the S&P, maybe how things work. Did that work for you? Did you learn something?